All right, this has been a wild day as the markets digest, or at least try to digest, the historic Brexit vote. And down 600 points, a moment where everything is going lower, we need to figure out what's worth picking at into weakness. That's why I want to take a closer look at Red Hat. It's the #1 provider of Linux-based open source operating systems for the enterprise, along with middleware, virtualization, storage, software, and a growing cloud business, all of the hot buttons that everybody needs more of. Now, Red Hat reported on Wednesday after the close, the market wasn't particularly impressed. Stock sank 1.7% yesterday on a big up day, not to mention, of course, tacking on another heinous 6% decline in today's Brexit-induced sell-off. What did Red Hat do wrong? I don't know. Well, the company reported in-line earnings per share up 18% year over year. Its revenue came in higher than expected. They brought in a record-breaking amount of big new business, 45 deals that were worth more than $1 million. However, Red Hat ever so slightly, and we go into this, lowered its full-year earnings forecast. And when you consider that this company has developed a track record of reporting beat and raise quarters, you can understand maybe why somebody might want to sell it. So let's check in with Jim Whitehurst. He's the president and CEO of Red Hat. Hear more about the quarter and his company's prospects. Mr. Whitehurst, welcome back to Mad Money.
Jim, it's great to be back on. I hope you're well.
Oh, thank you, Jim. Hope same. Now, before we get into Brexit, because we have to, I just want to clarify something. You know, and I know, and you've taught me that we always want to look at how the billings are, because that's the future, Red Hat. And your billings accelerated to 16%. That's the key metric I look at. Am I still on base with that?
Yeah, I think you're on base with it, Jim. And as we've talked about, there is some volatility in billings. I actually even prefer short-term billings, which grew 19%, which was a really nice acceleration year over year.
All right, good. I just want to be sure because, you know, this guide up, guide down doesn't mean as much to me as what you're telling me about the future, which is billings. Okay, you've got a really interesting thing going here. One of the banks that I watch very closely is BBVA. You've signed a strategic collaboration with them. This is a Madrid-based bank. And I figured this is the kind of thing that some people might say, well, wait a second, Red Hat has business over in Europe. We should be worried about it. Give us a real-life example of what you might have told people at Red Hat about what to do with Europe, and think about like a BBVA situation to make it all come to life.
Well, sure. So Red Hat is known for providing cloud and kind of next-generation IT solutions for enterprises around the world. About 25% of our business is in Europe. And so for a company like BBVA, what we announced is that we will partner together going forward as they look to replace their old legacy systems with next-generation systems. They want to have a partner to help them do that. And that's from everything from their core banking system, ultimately to their cloud offerings that they can offer mobile applications, et cetera, to their customers. And they're looking for partners to do it. And, you know, in the old world, that used to be the IBMs and other three-letter, initials. Today, that's companies like Red Hat that can offer really modern solutions to help address those problems that are natively cloud-based and dramatically lower cost. You know, in terms of Europe overall, certainly we'll watch what happens with Brexit. The good news for Red Hat is we do particularly well in down markets. We did incredibly well back in 2008, and we certainly don't think we're in a situation like that. But because our solutions are so high value relative to alternatives, down markets are actually pretty good for us.
In other words, just so people know it in little less techies, you save customers money. So if BBVA or any European bank wants to be able to save money, they bring in Red Hat as opposed to their existing system.
Exactly. Replace those big legacy iron systems with modern technology that's literally, in times, an order of magnitude lower cost.
All right, now we got to tackle 3 scale. You bought a leading provider of application programming interface. Now, you use API throughout this. Most of the people have to keep checking to see what API is. What does this offer a customer that you didn't have, and what's the value proposition?
Well, so Red Hat offers a lot of application infrastructure. So for developers writing an application, we provided most of the infrastructure they need to do that in a traditional large enterprise. As the world's changing and people are using companies like Salesforce.com or Box, these are companies that offer their software as a service. And now you want to pull data out of, let's say, your CRM system like Salesforce. How do you get it? Because it's actually sitting on Salesforce's computers. And the way you do it is via something called an API. It basically specifies how do I, as Red Hat, go get my data out of Salesforce to pull into, let's say, a mobile application I want to offer to a customer. And that's done through APIs. And so rather than have to hand code every time you want to go to Workday for this one or Box to get some data or Salesforce, you say, how do I have a way to do that in a managed way so I can securely get to all the APIs that make sense for my developers? And that's what this software does. It basically offers a way to manage access to those APIs, both the ones where you're going out to your own software as a service like Salesforce to get, or the ones that you're offering out to your own customers when they're looking to get data. And so for a next generation developer, it just helps make their life easier. And Red Hat, as a leading infrastructure and application infrastructure software provider, it's really a functionality we need to be able to offer to developers.
Okay, one last question, Jim. I find it interesting. Everybody seems to partner with everybody now. Microsoft and you. I mean, how do you get in a room with them? I mean, you guys have been trying to eviscerate them since you came public. How does that work? I mean, you guys like break bread and say, listen, now we're partners?
It pretty much happened that way. Our customers really want to run our stack on Azure, especially the retailers. Retailers, the very large ones, don't necessarily want to run on Amazon.com because Amazon's a competitor. So a lot of the big name retailers that all run on Red Hat came to us and came to Microsoft and said, look, we got to be able to run the Red Hat stack, but we got to be able to run it on a cloud other than Amazon. And so they really forced us together.
All right.
I do have to tell you, I had a meeting in Satya Nadella's office, and I did steal a couple of Microsoft-branded pens because whenever is the CEO of Red Hat in Microsoft's office.
No, I think it's absolutely amazing. One last thing I wanted to ask you. Sunday night, will you have a meeting with your staff? Monday morning, a meeting with your staff. Let's go over again what it means, Red Hat, Brexit.
Well, look, I think we have a lot to wait and see what happens. The first order implications, there's a lot of currency moves that we'll have to work our way through. I'm going to guess that this is going to slow capital spending, and that's going to include some IT spending, not just in Europe, but kind of globally as people wait and see how this settles out. And so for us, what that means is, in good times, we sit here and talk about innovation. We can help you innovate. In more difficult times, we sell a value proposition of we're lower cost, we provide better value. And so we'll see how it goes over the next couple of months. We may tweak our messaging to our customers a little bit from the innovate and grow to the carve-out cost messages. And either way, I feel good about our business for the year. Again, we were surprised at the result. We guided that we still felt great about the business. We didn't take up guidance, but we feel really good about it, and we still feel good about it post-Brexit vote.
Excellent. Thank you so much, Jim Whitehurst, President and CEO of Red Hat. Good to talk to you, sir.
Great to chat with you.
Yep.
Thank you.
Absolutely. Slowing capital spending down. It's going to be a theme. You're going to have to get used to it. Jim Whitehurst, President and CEO of Red Hat, made us a lot of money. Stay with me. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.